and look forward to being with you today on our Canadian Mortgage Weekly show. This is our fourth episode, so thanks for joining us. Today, on our fourth episode, we have Sam Thompson joining us. Sam Thompson is a mortgage agent here in Simcoe County as well. He's been working with us for about a year now, which is pretty exciting. And he's brought a lot of value to the team. And he's married now and moved in from Ottawa. Sam, it's really awesome to have you talking with us today.
Yeah, thanks for having me, Joe. It's always fun. I actually really look forward to doing these videos each week, so it's good to be a part of it. And yeah, just to introduce you, give you a formal introduction as well. We're being hosted today by Joe Bladek, who is a mortgage professional, again, in all of Ontario, but for the purpose of these videos, primarily Simcoe. And Joe is actually really great with working with, new buyers, new to Canada. If you're looking for second mortgages for rental properties, Joe is the housing guru. So it's good to be on his team for this video.
Oh, thanks, Sam. I appreciate that so much. And it's nice to be able to hear that. I love working with all those different types of mortgages. I love all the different types of financing that we can do, rental properties, all that. And yourself, you've been helping a lot of our first-time home buyers, which has been really great. They've been really happy dealing with you. You help them save money on their purchase simply by helping them connect with grants and rebates and credits that are available for first-time home buyers. We actually had some first-time home buyers close this week. You did
That's
a good
right.
job on that. So just wanted to uh, give you a shout out there. So that's great. So on today's show, we should also not forget to mention today's contest, which is pretty exciting. Sam, why don't you tell everyone about what they can win?
Yeah, absolutely. So if you have watched our videos before, you know that at the end of each video, we do a draw for a e-gift card to Skip the Dishes for $25. So the criteria is very simple. It's very easy. You can do it in 10 seconds. You either just need to like, comment on the video, or even share the video. And what we'll do is at the end of next week's video, we'll look back to everybody who has, done any of those three things, and we'll actually add a ballot to the draw for your chance to win. So stay tuned for the end of the video if you're somebody who commented, liked, or shared last week's video, because we'll be doing a draw for this week's winner.
Oh, that's awesome. Yeah, what an awesome contest. And every time we talk about skip the dishes or anything about food, it makes you really hungry. So anyone out there, if you're getting really hungry, definitely like, comment, or share the video, and we'll make sure that we pick your name up and have you at next week's draw, and then we'll connect with you to give you that awesome gift. So yeah, today's episode, fourth one of the year now. We're going to talk a little bit about what's been on people's mind, and that's typically the topic of today's show is where does this market go from here?
Right.
And Sam, we've seen the market go crazy in 2020.
Absolutely. Yeah.
Yeah, I mean, people that bought in 2020 at the start of 2020 have done really well, and people thought some people thought the market could go down in 2020. We saw predictions saying the market could go down in 2020, but everyone made out really well.
Mhm.
And you know, where does the market go from here?
That's right. Yeah. I mean, as long as we're seeing, the rates stay where they are and stay at a lower rate, then, it's likely to continue. But I think there have been, a lot of the busyness is attributed to lower rates because we've been getting, an influx of phone calls for people wanting to refinance or get pre-approved to capitalize on these rates.
Absolutely. Yeah, there has definitely been a lot of people calling in to get refinanced at lower rates.
Hmm.
You know, people have had mortgages that they locked into last year when rates were 2.99, and now they're refinancing, breaking that mortgage and getting into a new mortgage at 1.99.
Right.
That considerable rate difference can save you around $200 to $300 a month in interest, and just that alone is worth it for some folks to pay the penalty.
Hmm.
You know, I so we seeing those. We see buyers securing rates, getting pre-approved. I mean, you're working with buyers to get pre-approved. We've seen an influx of those.
Hmm.
Considering it's only January, it's like we're seeing April volumes almost.
That's right. It's been very, very busy. And again, the benefit of getting pre-approved is it does guarantee that rate
Yeah,
for the full pre-approval. So again, that's definitely been driving a lot of the first-time buyers to jump into the market because they're seeing the rates this low and they just want to lock it in for that rate hold period.
exactly. Yeah, it's interesting to get other people's perspectives on this. I remember last week we had Mary join us, and she gave us her perspective of where, like, some of the market stats and where we were at down in the Waterloo, Kitchener, Cambridge area, which was nice. And it seems like that area is going crazy because everyone's moving out of Toronto. I don't know.
Hmm. And we've definitely seen that it's not even just limited to those areas that are closer to the GTA, like Simcoe County. I believe we were looking at the stats in 2020, and at one
Yeah,
point it was the number one destination for people leaving Toronto, which definitely, you know, drastically affected the housing market, right?
yeah, exactly. So yeah, it's going to be interesting to always get other people's opinion on that and that. So, but from what we're seeing, I mean, we're seeing a lot of people just kind of uh, get pre-approved. They're moving, um, and they're also taking this opportunity when this pandemic's going on is to reevaluate where they're at with their life. Maybe getting a bigger house, maybe moving, not only moving cities but also changing the way
Mhm.
they live, changing the type of house. We're seeing a lot of bigger houses, people buying bigger houses for their family that are staying home now. So it's really driving up prices a lot. So
Mhm.
mortgage rates, it allows someone to also get their mortgage rate redone when they're moving. So when they're moving, typically a lot of the times we see people keep their mortgage rate when they're moving to the new house by porting their mortgage, and that way you don't have any costs involved with your mortgage. You can just take your rate with you, especially when rates are going up. That's really good to do.
Mhm.
But now people are saying, you know what, we don't want our rate. We want to break our mortgage at this time and move to the new house. And typically, also, if people decide to do that, they can move and buy something that is higher priced, maybe $100,000 or $200,000 more, and be paying the same mortgage payment that they were at that higher interest rate for their current home. So it's almost like moving
Right.
up doesn't cost them anything more monthly.
Hmm. Yeah, and I think we've noticed a few people as well taking this opportunity, moving into 2021 to even start reconsolidating some of their debt in that new mortgage amount, like
Yeah.
lumping that in with a lower interest rate. We've seen a few cases of that as well.
Yeah, exactly. That really helps people out. When you're doing that, you might have a good rate on your mortgage, a good rate on your car loan, and a couple good, you might have a good rate on your line of credit. However, if you have all those different accounts and you're paying all those payments each month, then you could be in a situation where if you have less income one month for whatever reason, you might have no income for yourself left over after making all those payments. Whereas refinancing, especially during the pandemic right now, into a lower rate would get you uh, set up with a lower monthly payment. And when you do
Hmm.
that, you're protecting yourself against any future income drops, shielding
Right.
yourself and giving yourself a buffer.
Yeah.
Yeah. Anyway, back to the market and where we're going from here. I think we should dial in and maybe try to get someone's expert opinion. What do you think about that, Sam?
Yeah, absolutely. I think we
Yeah.
have someone lined up to chat with us today.
Oh, that's wonderful. So yeah, let's see. Today we have Andrew. Actually, Andrew is a real estate agent down in the Durham area, and he's worked with our office for a number of years now. Hey, Andrew. He's
Hey
actually
guys.
he's helped a lot of our first time home buyers as well as moving up home buyers. He's done a wonderful job. He's always helping my our clients find the best deals in the Durham, GTA, and outside of GTA market. And Andrew, you got a son, you're married. I mean, how's things going these days for you?
Certainly, very thankful for what I'm able to do. Can you guys hear me okay? I'm in the office here.
Yeah, everything's working
Fabulous.
great
And
there.
good morning, Joe. Good morning, Sam. Nice to see you guys. Thanks for having me on. Yeah, Joe, no, honestly, we're doing fantastic. We're dealing with the COVID situation, as I'm sure you've discussed already, in one form or another, but very thankful. We're working still, for which I'm particularly thankful. Real estate, much like mortgages, been an essential business for how long already? Well, the whole time. So thankfully, we were able to provide and able to help a lot of people in pretty tough situations, I'm sure, over the past year.
Yeah, absolutely.
So, yeah, I mean, it's an interesting year. Did you have a question for me, Joe? Or
yeah, definitely. Thanks for joining us. I love that you are joining us today. We are actually talking about where we're going from here. We have a lot of clients, they don't know what's happening in 2021. They're hearing a lot of different buzz out there. There's articles coming out, talking about real estate going the direction of up, some coming out with the direction of down. And, we wanted to dial in with an expert, and an expert such as yourself. I know that you are really good with stats, and you always send me stats about the markets, especially down in the GTA and Durham. You got really detailed statistics there. So we wanted to dial in and get an idea of where you think the market's going in 2021.
okay, good question, and obviously one that's probably on the minds of a lot of people these days.
Yeah,
So I'll put it to you this way. You're right. Obviously, I work predominantly in the GTA, central and east, but quite a bit west as well. However, over the past couple of weeks, I've had conversations with people in Barrie, people in Oshawa, and Lindsay, interestingly. So just I mentioned that because this effect that I'll be talking about is happening all over the GTA and outward, the outskirts as well, quite a bit far out, actually. So you mentioned statistics. I'll mention the statistics of what is, and then I'll tell you what I'm thinking is going to happen more than likely this year. So just a few days ago, I got stats on this. We were sitting at about an inventory of about 8,000 roughly active listings. That's about January 24th, 25th. It was that I got that number. The normal number on a normal year at that time should be about 12,000. So 8 versus 12, 50% higher. Or in this case, we're 50% lower the normal inventory. The other thing is we're selling at a pace way above normal pace for January. So you put those two things together, and if we look back at 2020, what we saw is month after month after month of record sales in the GTA, which is pretty astounding considering, Joe, you're mentioning in terms of articles and such, large, big names like CMHC, some big groups came out with saying that the summer is going to be very slow and the market is going to come down. Nothing of the sort. Wow. And here's the thing. I know you guys have a lot of buyers that you're working with, and there are two stories. There's the seller side and there's the buyer side.
Yes. Exactly.
The numbers you just mentioned to you naturally tell you that it's a particularly active market, and it's really leaning towards the seller.
Okay.
Now, that is not just in Toronto, where things are always a little bit nuts, but it's across the board.
Okay.
I had conversations with somebody in Barrie with multiple offer situations, Lindsay, multiple offer situations. I knew it was going to be on, so I actually checked a house that I put an offer in on 2 days ago in the east side of the GTA, investment property. Yes. It was listed at $499. Normal value, even in a high market, should be around 600.
600, okay.
Sold for 713.
Oh, wow. Are you kidding me? Wow.
Yeah.
That much. Wow.
Wartime bungalow in Oshawa, to be more specific. Why I mention that, that's an investor's delight.
Yeah.
So in terms of you guys, what can I tell your clients that might be of some benefit? I'll be very candid, as I always am. The market is going to be a rough ride for buyers this year. Okay. Especially first-time buyers. We work, Sam and I, we've worked on a lot of these first-time home buyers over the past few years. It's not impossible. By no means be discouraged, but know what kind of market, what the market has been doing. So for the rest of this year, my anticipation and some of the best sources are saying this year is going to continue exactly like this. Wow. We're going to have a hard time keeping up with inventory. You guys know about the interest rates being particularly low. Yep. And it's a bit of a rough ride, especially if you're trying to get into the market in a freehold, something like a semi-detached or a detached or a townhome. And yes, this extends even out to Barrie, out to Burlington, Hamilton, out to Oshawa, even Lindsay and further out. So obviously the further out you go, the more you bang for your buck. And yes, there's more possibilities. However, the same story, unfortunately, does go on. So if I may, there's a bit of a bright spot for investors and first-time homebuyers, if I can share it. It's something I just mentioned to an investor literally before I got on the call. The one aspect of the market that's been lagging, particularly in Toronto, but also outside of Toronto, the city, is the condo market. The condo market is actually soft. One reason is the COVID situation. People are going outside. They're realizing I don't have to live downtown if I don't want to. I can work from home out in Oshawa, for example. And so there's been a big exodus out of Toronto, especially the core. Now, the other thing is, as you know, with COVID, immigration has been minimal for obvious reasons, closing the border and everything else. How long that'll happen, how long that'll continue, I don't know. But for the time being, and it has been for about 4 or 5 months, the condo market has been soft. So for some of your clients, those who are certainly in Toronto, but outside, there's plenty of condo complexes all over the GTA, up in York Region, Peel and Durham. Yes. That is a part of the market that some of your clients actually can take advantage of, because there are not the multiple offer situations. Wow. There are clients who clearly want to sell, maybe because of COVID, they want to leave the city. And some of your clients might be able to take advantage, get a condo because as we know, condo prices for the most part are cheaper than freehold, comparatively speaking, in the same market. So while there's, I don't want to say bad news, but difficult news for some of your clients in terms of the market overall, the condo market is an interesting one. It might be a way for some of your clients to get into the market for the next few years, because they do appreciate, they do well, and this COVID thing isn't going to last forever, by the grace of God. And that's something, at least a bit of good news in a year that's honestly, if you're selling, great. If you're buying, pin your hat back, so to speak.
Yep. Okay, that's good. So like anyone looking for a good deal right now, condo market's what you're saying, like there's some opportunities there, right? So if you're looking to invest in the condo market, there's less less competition. You can get your offer accepted. You can have more kind of a time choosing. So would you say that a lot of the inventory then is specifically in the condos right now in downtown Toronto?
Proportionally, I'm not sure exactly where it stands, but definitely there's inventory that is sitting longer. Days on market is very different. Freehold, townhomes, semis versus condos. And again, that's why it's one of the reasons. Now, they do sell, and the occasional one will have a multiple offer situation for a possible bidding war. But even just this morning, when I checked, out of say 20 downtown Toronto condos in a specific area, I think I saw 4 or 5 that had offer dates. The rest did not, and some have been sitting for over a month. So there's opportunities there to be had for those who kind of are thinking more long term.
I can see that. Wow, I did not realize there's that much that much days on market for some condos down in that area. So that's really good. Yeah, I'm seeing that as well, Andrew. I'm seeing a lot of people come to me and they want to get pre-approved so they can be ready to go. So someone like yourself, they can meet with them, have that pre-approval letter, can be putting in that offer, and can show that pre-approval letter with the offer if needed, just so making sure that that seller knows that this buyer is serious, because that can help too. And getting pre-approved makes all the difference. If you as the real estate agent are getting that phone call at 8 p.m. saying, can you go up 20,000 more and all that stuff, right? You
Absolutely
really need that at this time, right? So
yeah, I'll mention Joe, Sam, and I know obviously what you guys do for a living. Mortgage brokers right now are indispensable. And I really mean that, because of exactly what you just said. You may be in a situation where you need to find out information quickly, and you can't wait till the next banking day or the end of the weekend to find out. And those who are pre-approved already, clients who are pre-approved and ready to go, if you have a chance at all, that's the one that's going to have a chance to actually win whatever the bidding war is, or get a good deal at a condo, for example, because you know exactly how much they can afford.
That's good. That's good. So that's good. Anyone looking for a condo right now, call Andrew. Andrew, how can people get a hold of you right now if anyone's looking for some more information about this, or some more information about moving out to any of those areas that you mentioned, or getting some information about some condo listings? How can they get in touch with you?
Well, absolutely, Joe. Yeah, they can. I mean, they reach out. Most people actually call me. I've had several calls from people I've never met. I don't know where they got my name. I'm assuming somewhere online, and they had questions about the market. Very much kind of what I mentioned today. So my phone number is 416-873-2275. That's 416-873-2275. And my website, askandrew.realtor. www.askandrew.realtor. Or just put Andrew the Realtor, and you can Google it, and you'll see my name pop up there. Obviously you guys, but any of your clients, always feel free to call questions about GTA or outward. Quite often I get information from there as well. So please feel free to reach out. I'd love to help.
Yeah, that's great. Yeah, you've really helped out a lot of our clients that have bought in the GTA and outwards. So definitely, Andrew, you've been great, and definitely recommend people speaking with you as well. So yeah, get in touch with Andrew. AskAndrew.realtor. That's a really awesome and very easy to remember address. So yeah, that's great. So I mean, there was one more question I wanted to ask, and I don't know if you have time for one more. And that's something that I ponder sometimes is, it's something that you actually brought up with me years ago, and that's, a house is almost like if you're married and both of you are earning an income, your house is a third income to your household. And I've always had that in the back of my mind ever since I heard you say that. And I'm thinking that is so true, because every year I look at my property and I see it's gone up X amount of dollars, and that's about the same amount as an annual income. So I wanted to know, like, do you have any data on like how much an average house went up last year, so people can understand, if they were planning to not buy in 2020, or if people were in the market in 2020, how much they would have made in 2020?
Oh, that's absolutely, Joe. Basically, I mean, for the past probably year or two, depreciation, it changes a little bit from townhome to freehold to Sammy. Condos have not done quite as well. One time they were up about 8% towards the fall of last year. Then it started actually going -1%, -2%. Depends on what's selling, because it's an average price. But very easily over the past few years, my house, your homes, is if you take, say, even 10%, and freehold were anywhere from 11 to 12 to 13% last year, but just say 10% for your townhome, your Sammy, or whatever. And say you bought it for 500,000. Even let's go 400,000. You bought a $400,000 home, and in 1 year it appreciates 10%. So that's $40,000.
$40,000.
So if you go on Indeed.com or any one of those, I do that once in a while just to kind of see where people are at. Yeah. That's a half decent gig, if you will. That's a job. For many people, that's a full-time job, especially towards the beginning of life. And if you think about that, your house is like a family member who has a full-time job that is actually tax-free when you sell the home further down the line to upsize, downsize, whatever. That's a really big deal. And every year, this really hardworking guy, the house, brings in this 10%, which becomes more and more and more. Next, as it appreciates, 440, that's 400, that's 44,000 a year he's bringing in. That he's a hardworking guy, keeps a roof over your head and everything else, doesn't cook as much. But if you think of it that way, it's quite amazing. And Joe, as you guys know, that's not even including the fact that they're paying the mortgage, the great mortgage rate that you guys probably got them. So they're paying what, I don't know, $8,000, $10,000 a year in principal. So he's making you 40 grand a year, and he's giving you an extra probably 8 grand because he likes you as a Christmas bonus, if you will. And if you think about it, that's how people make so much equity. That's how Joe, I can give examples of several of our own clients that are up $250,000 in like 4 or 5 years. And some of these people are simple people with normal jobs. They don't have a bunch of money invested in the bank, but suddenly they have $250,000 sitting there in equity if they want to take it out in cash, if they want to sell it or whatever. Now, that's a lot of money. And, that's something to keep in mind when you're looking at a home. It is a home, but also it just automatically becomes a great investment.
It's a really good point. That's a great way you put it. I mean, it's a really hardworking, person as part of your household, right? Bringing in.
He's a great guy.
Yeah, great guy, right? So, who doesn't want a third person bringing in an extra income like that?
Exactly.
So, yeah. So if you're looking at that and you're thinking like, oh man, I don't want to buy this year because I'm afraid of missing out. I don't think I'm going to miss out on anything because I want to save more money. I want to put more of a down payment down. I want to wait because right now I have to buy with a co-signer. And if I wait a year or two, my income will be higher and I'll be able to buy on my own without a co-signer. All those folks, I mean, as they're waiting, they're missing out on that 40 grand a year.
Yep.
Yeah.
They're missing out on the appreciation. And as you guys know, in any market, and we're talking about mutual funds or stock market, anything else, it's almost impossible to time the market just right. Yeah. At your best, you find out when it's at the lowest when it starts to go back up again. That's the only way you know. Yeah. And so we've all known people that have been renting for a long time, and I'm just waiting for it to come down and get it just the right time. Yeah. It'll never be the right time. And as I've just mentioned, Joe, we've had clients buy near the top of the market in 2017. To the best of our ability, we got them a great deal. And still now, looking at the numbers, they're way ahead. They're way ahead in appreciation and way ahead in actually paying down the mortgage as well. So it's difficult to lose in a great market like the GTA.
And I remember that specific year, there was all that doom and gloom out there in the news. All the doom and gloom saying the market's at its hottest point 2017. You got to get out now. Prices are expected to soften, right? And then what have we seen? Like you're saying, people are up since then now. Right?
Absolutely. Ever since the correction, we're way over even the top of 2017 prices now. So yes, the correction was there, but unless you have to sell at that exact moment, mind you, if you did and you had it for a few years, you're still up. It's difficult to lose in the real estate market.
Yeah. And it comes back to the whole thing that everyone in real estate always talks about. It's the long term. It's over the long term, it always makes sense.
Absolutely.
Awesome. Well, Andrew, thanks for joining us. We're going to have to let you go here and continue on.
My pleasure, guys. Anytime. It's great to see you guys. You know, it's nice seeing people these days. It's always usually a phone number. So
we got to start doing our seminars again, you know, the in-person events, right?
That's right.
Awesome. Well, thanks for joining us, and I hope you have a great day. Thanks a lot for your valuable information. I'm sure everyone here is very thankful. If you want to get in touch with Andrew, please rewind the video to check him out. askandrew.realtor is his website address, and also comment, share, like the video below. If you have questions, please ask them below, and we'll make sure that we answer them. Does anyone have any questions? I don't know, Sammy, do you have the portal up there? Does anyone have any questions for Andrew today before we let him go?
Let me have a look here.
All right, so while Sam's checking that out, we'll just thank Andrew again. Thanks for joining us today for our show, and I appreciate you coming on.
My pleasure, guys. Anytime. Thank you for your time. I appreciate it.
All right, have a good one.
Hey, boys.
Yeah. No questions yet, but
all right, so
we'll keep a look at it.
No worries at all. You take care of yourselves.
All right, Sam, that was some awesome information, that Andrew just shared with us.
It was. He's very passionate about what he does, it really comes through when he's speaking.
Yeah. And you know what? Exactly. I love how he's so passionate about it. Like, we're so passionate about mortgages here, and I love talking about financing and love talking about the possibilities of different ways we can do the financing. And he's all about the real estate, and he's got the same attitude for real estate with being so passionate and finding all those opportunities for whoever he's dealing with. So yeah, awesome. So Sam, if there's no other questions, let's just remind everyone that, you know, if they have any questions, they can leave them in the comments below, and they can win, right? They can win the contest there.
Exactly. Yeah. As you were just saying, if you have any questions, we can forward them to Andrew if they're specifically for him, or if they're for us. At any point in the week that this video is on, or that you watch it, if it's later than today on Wednesday, we're going to be looking back at all the questions, and we'll round off any of them on our next week's video, as well as any likes, comments, shares. We're going to be entering your name into a draw. And the end of next week's video, we'll be going through everyone's name, and the winner will receive a $25 e-gift certificate for Skip the Dishes. We want to, you know, stay safe and keep it contactless, but, you know, keep eating nice takeout food. That's definitely something to miss in COVID, is being able to just go out and eat.
Absolutely. Yeah. I can't wait to give away our next card, and we're about to do that here. And just before we do that, I just wanted to give some shout outs. Hey, David, how's it going? Good to see you. Thanks for saying hi. And hey, Alex, good to see you too. Appreciate you guys saying hi. And I can put my microphone closer. Thanks so much for the comment there. But Sam, do you have the names available for the draw for this week?
I do have the names.
All right.
My favorite. Do you have the snare?
All right, I got the snare. So as everyone remembers from last week, I wanted to make sure that it's a good quality sound. Our last snare drum was not great, so this is a Ludwig Black Beauty. It's a pretty good snare drum. I think it's one of the best. So we'll make sure that we got a good snare drum sound. And last week I had this Zoom filter on, so I've taken that off, so we'll be able to hear it a little better. All right. So
Alrighty, you ready?
So there's the names from last week's likes, comments, and shares. If you want to like, comment, or share for next week, you can do that and be entered into next week's draw. Okay, here we go. All right, who do we have as a winner today?
We have Jonathan Gonzalez.
All right, awesome.
Woohoo!
Congratulations,
Congrats.
Jonathan. Oh, great. Well, thanks for entering to our contest, Jonathan. I am excited that you won. And if anyone else wants to enter into the competition, the contest, like, comment, or share, like Sam mentioned, if you have any questions, please comment below. Sam and I can look at those questions for next week and make sure that we address them on next week's show. Hopefully next week we can do this again. What do you think, Sam?
Yeah, sounds good.
Okay. Thanks very much. Well, I hope everyone has a great day, and thanks for joining us, and we'll talk to you all later.